What up, what up, what up? Big Cheds here, folks. We're going to do another video. This is for the Trading Quotes playlist. Of course, Big Cheds on Twitter. Go ahead and check that out. I'm a founding analyst at Bitcoin Live. Very proud founding analyst. This is for my YouTube channel. And if you go to the playlists, boom, Trading Quotes. This is the third book. I published it in 2022. I'm making the whole book for free. And let's get right into it. We're going to do weeks 42 and 43. I really like that this video series allows me to expand in these quotes. I can just tweet it out, and you can say, "Oh, that's nice, Cheds," and that's a great quote. But I can expand on it here, and so I think this is a nice way to add value. So let's get right into it. So, week 42 on Monday. The hardest part of trading is not doing it. What does that mean? Well, you have money in your account, you have money in your brokerage account, and it's like, this money should be in a trade. It's like FOMO, right? You see somebody else talking about a chart that's going up, and you've got all this cash. Like, what am I doing? Why am I just sitting on this money? And it's like, you're probably going to force it. And so a lot of the time, that's the first thing. And the second thing is, a lot of the time, the price is just in some kind of a well-defined price range, and you're waiting for a clue. You're waiting for it to give you a momentum signal, breaking resistance, testing support. And so you really just want to wait for a key level. So patience will reward you, and the thrill from a trade, the thrill from opening a trade is hard to ignore. So really the hardest part of trading is not trading, it's waiting. That's the hardest part. Tuesday, don't be a hero and try to guess the bottom. Stepping out in front of a trend will get you run over by a freight train. I've learned this is one of the most important lessons, is you want to be a trend follower. So it's tempting to want to buy every little bounce in a downtrend and say, "Oh, this is it. This is the bottom." And if I buy here and it goes up, wow, I'm in great shape. I've nailed it. But problem, most of the time that trend will continue. Trends tend to continue. It's going to go lower, and then you're going to have to figure out, what do I do? Do I cut my loss? Do I try the next level? And now you're a community member, So don't be a hero in trying to guess the bottom. Wait for it to turn around. Stage analysis is good. 2-level filter, downtrend break, and then a lower high break. So specifically, one of these charts, just wait for it to break a lower high. Wait for it to recapture some lost support and start there, right? Don't step out in front of the trend. You're going to get run over. Wednesday. The main purpose of this ties in with this other one. The main purpose of a diagonal trend line break is to alert you to look for a horizontal break. Be extremely careful structuring any trade just based on a diagonal trend line. So I know it's just the words here, but if you imagine trend line going down and you break the trend line, the problem is you can ride down with the trend line, right? That's why you use a 2-level filter. Use the lower high break. So when you break the trend line, now you start to look for a lower high break. You don't jump in on the trend line break. That's going to get you in a lot of trouble, okay? This is my methodology. Like, don't get me wrong. There's other people who, they just trade the diagonal and good luck. Thursday. Managing your emotions, that is a lot harder than learning how to read charts or financial statements. You can read the white paper, you could read the 10Q, the quarterly report, or you can read the chart, and where's the price versus the MA200, where's the price versus, resistance, what's the RSI. That's so much easier than managing your emotion, right? Like when you're frustrated, you might not even realize you're frustrated, or when you're excited or you're sad, you might not everyone has that awareness, especially if you're in the emotions, if you're in the moment. And that's what a trading journal is for, to force you or to encourage you to stop and to think, what am I doing? How am I feeling before I go forward and risk my money? So managing your trades, that's the hardest part. Managing your emotions is the hardest part, because that will really get you into trouble. You can have the best strategy, you can be the best trader in the world, the best investor, but your emotions will trip you up. It's an often overlooked part of trading is monitoring your emotions, and make sure you're doing that. Trading journal. Emotional mindfulness is critical. Friday, in the order book, sometimes people will place a large sell order with the goal of intimidating buyers. This is called a loading wall, and it exists to help someone that wants to continue accumulating before the price goes higher. I have a video on this in the encyclopedia, and it's interesting. I just posted about this in Bitcoin at 80K, had this loading wall. And so how does it work? Well, let's say you want a lot and you already have some, but you want more. You can put that big sell order and it will intimidate the average retail person. The average retail person will see that and say, oh, there's no way the price is going to break through that level, so I'm just going to sell here, right? What's happening is you're selling to the person who has that fake sell order. Because as soon as the price gets up there, spoofing is another term for it. As soon as the price gets up there, they're going to pull the sell order because they don't want to sell. They want you to sell because they're trying to accumulate. So it's called a loading wall. It's that big fake ask. All right. Saturday, never, ever base your trades off someone else's enthusiasm. People are excited. Well, you know what? They're talking up their bags. You see people all the time. And hopefully you've been in that situation yourself where you get excited because a trade is going well or you've made some money. Now you're causing other people to have FOMO because they see you bragging. They see you posting gains. They see you being excited. That's not your trade. Let them be excited. Never base your trades on someone else's excitement. Base your trades based on your own analysis, your own reading of the chart and the chart levels. You can be aware of their enthusiasm, but it should have no impact, no effect on you, okay? Sunday, when given the chance between a reversal and a continuation play, take the continuation play every time. Go with the trend. You want to follow trends. Buy a dip in an uptrend. Sell the rip in a downtrend. These reversals, most of them fail. And like the vast majority of my trading losses, especially the crippling ones, have been me anticipating a reversal and just getting completely smoked. So just take the continuation play. You're better off. Play a breakout and trade with the trend. Week 43, we're getting there, folks. Go Monday. Go easy on yourself. You simply cannot learn without making mistakes. Otherwise, there is no lesson to draw upon. There is no shortcut to becoming a good trader. You need to make mistakes and then take those mistakes and analyze them, dissect them. What did I do wrong? And then you can learn from that. It's like learning anything. You can't become good at anything without making the mistakes that teach you what not to make. It's like growing up. In life, it's the same thing. We do dumb things when we're young, and hopefully we survive those foolish behaviors. There's no shortcut. There is no shortcut. You have to make mistakes, and hopefully they're new mistakes. It's not the same mistake over and over again. Just be patient, respect each mistake, and learn from it. Okay, Tuesday, stuck money. I like this phrase. Stuck money slows you down because liquidity is the reagent for profit. Oh, what a great quote. I was feeling frisky when I wrote this. Liquidity is the reagent for profit. Dump that bag and move back to cash so you can be ready for the next trade. What does this mean? Well, you have a limited amount of liquidity. And if you bought something, okay, and you didn't stick to your stop, like say the trade idea fails and you didn't stick to it, the money's just sitting in there and you've convinced yourself, I'm stuck. I can't do anything until it bounces back to break even. Like a lot of the time it's not going to. It's going to continue to work against you. And now that money is just sitting there and you can't use it for a good trading idea if it comes along, right? Liquidity, right? The ability to open a trade, that's the reagent for profit. That is what is necessary. It's the catalyst. Dump that bag. Dump that failed trade and move back to cash so you can be ready for the next trade. There's going to be another trade. This is critical, folks. Wednesday, using chat rooms as a primary source of trade ideas, that leaves you dependent on others because you have this blind hope that these folks have picked something good for you to risk your hard-earned money on. Your money is hard-earned. You worked hard for it. I don't know what your job is. Maybe it's trading and you're surviving and trading, like, well done. But a lot of people, just regular folks, and they have some extra money or they're trying to move up, and that's their hard-earned money. You don't want to be cavalier or just casual with it. And this is something I always say, your trading ideas need to come from your watch list, your well-curated watch list, 10, 15, maybe 20 plays, and you know those charts. You have muscle memory in them. You know what the key levels are. You can respond to volatility and know what it means and not freak out. If you're just firing away at whatever, like they just throw out some ticker, buy this, like what is that? That's not a strategy. You're probably buying their bag. You're going to be their exit liquidity. Thursday, trade like no one else is watching. I don't even know what this quote means, and I published the book. It's, like dance like no one else is watching. It's really just the idea that you want to try to eliminate the noise. You want to try to, again, tying in with the quote before, you want to just trade like you don't care what other people are doing. Don't pay attention to what they're saying. It's your watch list, and the price just broke a resistance. You go long, it's just, and be accountable to yourself. Don't trade like, I want to do this trade to impress this other random anonymous person on Twitter. Like, no, what is that? Trade like no one else is watching. Do it for yourself. Have your own methodology, and you're gonna turn out much better in the future. Friday, when you see market participants capitulating, giving up in large numbers in social media, that can hint at an opportunity. It's often said that another person's capitulation is your nut entry. Nut meaning best entry. This happened, recently with Bitcoin around 60K. A lot of people gave up. They announced it publicly, and it was just kind of in large numbers. I didn't pick up on that, and I should have as a contrarian. Other people did, But it's true. When you see people giving up, often a lot of damage has been done, and sentiment can be just a very important clue. I wouldn't say that it's I don't know that you necessarily base your trade on it, but it's a piece of information that might give you a little bit more confidence if the price does something, if price has interaction with a key level. Okay, this is an important sentiment factor here. Okay, now Saturday, talk is cheap. The price, it may or may not be. So, which is why we look to the chart to find out. Everyone says it should be higher. It should be lower. It's worth this. This is what's going to happen. Whatever. Words are wind, to quote George R.R. Martin. People just can say anything. But in terms of the price being cheap, all that matters is what is the price trend doing, and that's what you're basing your risk on. That's what TA does. It helps you define your risk, understand the strengthening and the weakening trend. That's what we looked into the chart for. If somebody tells you the price should be whatever, who cares? That's just their opinion, not the market's opinion. The opinion of the market, the overall market, is all that matters. And Sunday, week 43. Sunday, it can be really frustrating. It really can be to sit around and wait for a good setup when you're sitting on a pile of cash. During these moments, remind yourself that it's better to miss a move than to get in at the wrong time. This goes along with that first quote of last week. The hardest part of trading is not doing it. It's hard. You're sitting around. You have all this cash. You're ready to go. But money in your bank account should not be the reason why you take a trade. No, bank account, your brokerage account, your trading account. You take a trade. You take risk. Right? Based on price interaction, based on the price doing something, right? It is so much more important to correctly identify the way the price is going and to ride it than to nail the exact top or bottom. And if you're trying to do that, or if you're afraid you're going to miss a move, you're going to get in at the wrong time, and now you're in big trouble. You're not sure what to do. You're probably going to end up bag holding, and then you're going to become a community member. So this is week 42 and week 43, and this is for the Trading Quotes playlist on my YouTube. This is the third book I published. I'm just honored to be making it completely free for you on my YouTube channel, Ched's Trading. Find me on Twitter at Big Cheds and Bitcoin Live, where I am a proud founding analyst. Make sure you folks check out the Trading Encyclopedia, 450 videos so far. I have more to record. But folks, thanks for hanging out here with me. I'm really honored that you are here. And this was a lot of fun. So thank you. Let's dance and we'll go from there. All right. Peace out. Peace out.